What up, everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about the difference between retail trading and smart money concept trading. So in this video, I'm going to show you which one is better. And as promised from last week's videos, I picked up 3 winners that won, and they're right here. So go ahead and reach out to me personally at RoyalBlu.FX to get your free consultation. Every week I hold 3 consultations for 3 winners. All you have to do is subscribe, comment done, and tell us what brought you to Forex. So let's get on with the video.
Nothing can stop me, I'm all the way up.
Popularity and the rise of smart money concept trading, I really wanted to show the difference between how retail traders trade and smart money concept trade. Okay, I really wanted to show what retail traders don't know versus what smart money concept traders do know, and that's what we're going to go into and dive into this video. Okay, so here we go. So, and I really wanted to start out with actually explaining, the smart money concept side first. So, what is smart money concepts? Okay, smart money concept trading is essentially refers to the use of institutional trading strategies which are aligned with the perspective of smart money. All right, institutional smart money trading is superior to any retail trading strategies on many levels. This does not mean, though, retail trading strategies do not work at all. Okay, so essentially, what smart money concept is, it's essentially just traders that trade alongside with what banks and institutions trade, how they trade specifically. Okay, but this again does not mean that retail traders don't know how to trade or retail traders trading doesn't work. Okay, I really wanted to show the difference between the two and what is considerably more effective in the market. All right, so as you see over here, smart money easily traps traders into the market at poor trade locations and then moves against their positions, stopping them out repeatedly for losses. All right, smart money are experts at manipulation and trickery. Retail traders need to understand manipulation and algorithmic movement and trade with smart money. So what does that mean? All right, so essentially smart money concept trading isn't just us or the people that know how to trade smart money concept trading, right? It's also the banks and institutions. Essentially, us smart money concept trading, we can't trick anybody in the market. We just can't do that because we don't have the volume and the means of capital to move the market the way the banks and institutions do. So essentially, if you want to call the banks and institutions smart money concepts or smart money, you can call them smart money or whatever, but they're essentially banks and institutions. Okay. One thing we can't forget about this, though, in terms of Forex, in terms of how the markets move, is that this Forex game isn't really a game between banks and retail traders, right? It's between banks and other institutions that are playing this game. We're just all a part of their game, playing their whole entire game, right? But essentially, smart money concept or smart money plays in the essence of how banks and institutions trade. So what we, as smart money concept traders, know is that we see their behaviors in the market and have a definition in terms of how to read a specific part of the market. Say, for example, like when a retracement happens, what does that mean to a smart money concept trader, right? When an extension breaks above structure, what does that actually mean to us, right? So smart money concept traders have definitions and meanings behind a lot of the movements and behaviors of the market, and hence as to why we're called smart money concept traders, because we are actually trading with what the bank's psychology is trading, right? So I want to show you the difference between the two and why smart money is far better than retail trading. Okay, so the reason why smart money is obviously far better is because, again, we follow the institutions. We follow how banks trade. All right. We can't do a lot of the manipulation in the markets. We don't have the means and the capital to do that, right? But again, we can follow their sort of behavior and sort of flow in the market. All right. So here's what the downfall of retail traders know and how they trade. Right. The downfall is they have no, in terms of trading, retail trading, retail traders have no psychology of the market's behavior, right? No understanding of price movement in the behavior, no understanding of liquidity and how to use it, no knowledge of banks and institutions' thought process, no knowledge of stop loss orders, no understanding of supply and demand, no understanding of mitigation, no understanding of price imbalance, no understanding of what banks are after. Okay, these are just a few things that I had that I put up here, but this is the majority of what smart money concept traders are trading, right? We mostly trade all of this over here. So that's the real big difference between the retail traders and the smart money concept traders. That retail essentially just trades break and retests and uses indicators and what have you. But as far as smart money concept traders, we use all the behaviors. We understand where the stop loss orders are. We understand supply and demand. We understand what the imbalance of prices, right? We understand what the banks are after. What are they after in the markets, right? We essentially understand their whole entire behavior, and we are analyzing their whole entire behavior, which is essentially the technical part of trading, right? Understanding how to read the market. And in order to understand how to read the market, we must understand how to read the bank's behavior. And the bank's behaviors is essentially plastered on your screen, right? It's plastered on the market. So that's the two differences really between the two, the retail traders and the smart money concept traders. So I want to show you a little analogy about this. So let's say, for example, you're in a casino, right? When you're in a casino, essentially what smart money concept trading is you're waiting to see. When you walk into a casino, you're ready to play, let's say, a game with the casino, which is the poker table, right? Let's say in this case, or maybe that's not even the poker table. It could be, I don't know, any game, right? But let's just say in this case, when you're playing against the casino, the card is laying out all their cards, every card that they need to lay out, right? And all you're doing as a smart money concept trader, or one of the things that you're doing as a smart money concept trader, or SMC, is really waiting for all the cards to be played out in front of you, right? Once all the cards are played out in front of you, now you can entirely see what the market is actually giving you. They're actually giving you sort of their answer, right? They're showing you publicly, right in front of your nose, what their next move is. So now once you know what kind of cards they have, now you, as the smart money concept trader or any trader, can go and start playing your best cards against them. So how does this analogy work in forex? Okay, well, essentially when prices are moving, right, when the markets is moving, we want to see what the market is telling us. We want to see what cards they're laying out in order for us to make the appropriate or the next appropriate move in the market. And that's essentially how this is done in this whole entire analogy. All right, we want to make sure to see what those banks are showing us. We want to see their bear cards so that we can play in our next move and say, okay, we know what they're doing here. Oh my goodness, I know my cards, I see what I have. I'm going to take advantage of this move now because it's clear bare naked right in front of me. All right, so that's what it essentially is. So in order to trade effectively, okay, in order to trade effectively in the market, right, one needs to know how to trade like the banks and institutions. That's the real answer here. Okay, we're not trading. Us retail traders aren't trading against other traders. We're trading with the banks and institutions. We're in their game, so we need to know how they move, right? How they move in the market. We need to see all their entire cards before we can play, because our money is not as powerful, and it will never be as powerful as the banks and institutions unless you have multi-million dollars in your account, right, in your bank. So all right, here's another analogy. Here's another example, actually. If anyone have seen Ocean's 11, all right, do you know how all the characters in that story they all have a certain job to do, right? They're all actually trying to, break into a casino and steal all the casino's money, right? Rob the whole casino. Well, I'm not saying that we should be robbing, anybody, because that's not what we're doing, obviously. But essentially, in the forex market, we're essentially legally robbing people, right? Legally speaking, because we're legally taking their money if we win. Well, essentially, what's happening in the movie in Ocean's 11? Well, everyone has a job to do. Each character has a certain criteria to do a certain job in the movie, right? They all have to know, the casino's lives, right? They have to know in terms of like who they're married to, or what their love life is, or what sort of position they're, what higher up in the positions there are, in all that sort of thing before all these characters, the characters who are about to rob the casino, before they rob the whole casino. They have to know everybody behavior, their father, mother, their uncle, their son in that movie, so that way the whole story can play out correctly. The whole robbing of that casino can happen accordingly and smoothly, right? So essentially, that's what we're also kind of doing, is we're reading the market's behavior. We have to know anything and everything about it, right? We have to know as soon as that market breaks above structure and starts to retrace, we have to know what that means to us, and what does that signal mean to us exactly, and where do we buy exactly? What do we do when price retraces and touches our order block or demand or supply level? What do we do next, right? Do we drop down a lower time frame from there? Okay, once that happens, what do we do next, right? When we're looking for the next signal, for that next move, for that next card to be played, we're looking for extra information, extra validity in that market before we take any action. And that is how trading is done. All right, not in the essence of breaking and then retesting, right? Breaking, and I'm not trying to downplay or say that that retail trading is bad or anything. Although it's not considerably good in a in a smart money concept trader's eyes. We don't see the market the way they see it. I mean, we can see what they're doing, but we don't agree to it. Therefore, we traded. We're literally built an idea behind how smart money concept traders should be working. Okay, so I don't want to blab too much about what I'm talking about, obviously, but I'm going to go into a live chart example, and I'm going to show you the differences between smart money concept trading and retail trading. Okay, so let's go down here. I want to show you a diagram over here kind of quickly. All right, as you see over here, we have an area where this is a bullish, right? It's a market that's going bullish, and so far you see over here that we had a break of structure, and prices retraced all the way down to an area of demand. All right, so notice when, as a smart money concept trader, when price breaks above structure, what we're waiting and anticipating for market is to retrace back to a demand level, right? That's a no-brainer. But as far as a retail trader goes, right? Prices would, when price breaks, they'd wait for some sort of area to break. They'd wait for an area to come back to an area of retest, right? Everyone knows about the retest and what is it? I can't even think of it now. Support and resistance levels, right? So this would essentially be a support level, and below it would be resistance, right? But notice what price does here. When price retests, price starts to push up a bit, but it doesn't entirely go at the level of supply here, right? Or it doesn't entirely even break that high, right? But instead, what price does, it shows that price is retracing back to an area of demand, right? So in retail's perspective, they're thinking, oh, okay, well, I guess I was wrong. I guess this is a seller's market, right? So the retails would see, okay, well, there's a break here now, and then there's another break. Now I'm going to wait for another potential break and retest. Oh, maybe they try to sell right here at a retest. Price fails and pushes back, and then it goes back down to like, shoot, I guess this was maybe this was a buy. They're going to flip their script now and say, okay, well, I'm looking for a buy here, and I'm going to try and buy. But again, the trade fails, going against them, right? They're like, okay, then I don't know. I guess maybe this is a sell. I don't know. Maybe I should wait for a break and retest here. Maybe if the market retraces a little bit, okay, sure, I'll try and sell it from here. Who knows, right? They're led by thinking, Okay, retail traders are led by thinking that breaking retesting is how markets move or how markets work in the market, right? And we know entirely that this is not the theory behind how the markets move. All right. So once this happens, right, you can clearly see that price is moving up. You know, you can retail traders may think, okay, well maybe this is a buy. I don't know, and we haven't seen this. Oh no, they would wait for this high here to be broken, right? And once this high is broken, right over here, right, they're already too late to catch the next move, and/or they start chasing this extension to the upside, probably targeting this high or anything above it, right? And that's what it is. It's, you know, retail traders run and chase the markets. They trade break and retests. They see, you know, a bunch of I don't know, a channel, for example, you know, channels, something like that, you know, and then buying and selling at an equilibrium, right? They see, you know, what is it? Trend lines, right? Maybe a trend line. They could form like this and start buying like this, right? And then all of a sudden, price, you know, so you can see over here, like retail traders bought, then price broke, and they were like, okay, well maybe it's a break and retest, so I'm going to wait for price to come in, break and retest, right? Price fails here, then they're like, oh, maybe it is a buy. I don't know, you know, and stuff like this. So it's very hard for a retail trader to decide what sort of direction the market is, because they're forever chasing. They don't have a clue of what the psychological part of trading is, right? So right, that's the bullish side, right? Again, you can quickly see it here, right over here, right? As you see, when there's a break, you can see so much mess is going up in terms of a retracement. There's so much retracement going up, you know, that both retail traders, or especially retail traders, will get in the mess of not understanding where the flow of orders are, where the direction is. They'll most likely think, okay, well, it is a sell, but price over here is telling me it's a buy, so I guess I'm looking for buys, right? There's no smooth break and retests happening here, I guess, so, you know, retail traders might fail here a lot, right, and get slaughtered. So I really wanted to go into a live chart example right now and really show you, obviously, the difference between how retail traders and smart money concept traders trade. Okay, so if you see over here, we have this diagram filled out here for you, and all right, so here we go. We're on the daily time frame right now, right? As you see, price is extending, breaking structure, showing a lot of bearish momentum right? Price breaks structure, then comes and retraces back to an area of supply, right? But if you zoom in here, I want to show you something quick. Look at where this area has broken structure, right? There's a lot of retail traders here that are waiting for price to get back, right, which has successfully done, and then start looking for selling positions right here, probably targeting this low, right? And this is where the big mess is, right? Now they're thinking, oh shoot, I guess this is not a sell anymore, right? They have their stop loss right above here, and the market, what does the market do? Price goes against them, takes them out entirely, right? And now, while price is pushing all the way back, they can't even make up a decision where price is, right? They think it's probably a buy or a sell. If you notice over here, I want you to see this break of structure here. When price is broken here, literally there's a break and retest happening right here, right? You can see buyers are buying, the retail traders are buying. But a smart money concept trader would wait entirely and wait for this demand to be tapped, right? If you can zoom out here, you can see what happened here. Notice what happened here. We had the market pull up right into this demand, and price is able to push right above it, right? So as a smart money concept trader, we wait patiently for prices to get to a demand or supply level, okay? But a retail trader waits for a break and retest, and that's where the downfall comes, obviously, right? Let's zoom in here, right? You can see now when prices respected something right over here. We can't quite entirely see what it is. Essentially, this is considered inducement in the market. Price is just holding this area here for other traders to be tricked into thinking that this level is a buy, right? And then once you have bought there, obviously you see that your trade would have been taken out. If you weren't able to reach the high here, price would have been able to taken you out right there and taken out your money, right? But as we all know, we don't place trades on the daily because the daily is too large of a time frame for us to place trades. But this is just an idea for you guys to see. Okay, so as you see here, a smart money concept trader would have seen that this is a huge impulse to the upside, right? We would be looking and waiting for prices to retrace back to an area of demand, as you see here, where this blue area is, right? This demand zone, right? But a smart money concept or retail trader, as you see, would have probably had a trend line like this, right? Something like that, and then wait entirely for prices to break above structure, right here, do some sort of testing, maybe a break and a retest, because this is not a full break and retest right here, right? And then push price up. You can see a lot of price in here was bought rather quickly without any indication if price should go and continue to the upside, right? But a lot of traders that sold here, right, just obviously see that this is the daily time frame, but if we scale down to the 4 hour or 1 hour, you can see that there's a lot of selling pressure happening here on this trend line, right? So you can see a lot of sellers were involved here. And this is what the retail traders would think, right? They would see to this that this is actually an area of interest for them to look for buys and sells, right? They might even put some channels like that, wait for buys and sells, buys and sells, buys and sells until the market shows the true direction and takes out all the sellers over here, everyone who sold that was holding this market, right? So once this break has happened, price retraces. Smart money concept traders, we look for buys, right, to head to the highs, and that rhymed. As you can see over here again, you can see that there's another channel that retail traders would have traded, right? Us smart money concept traders, we'd wait for price to fully retrace, then we wait for an area or a signal and a sign for us to wait to look for buys, right, to go long. You can see there's a change of character happening here. You can see that there's an area of entry for the smart money concept traders, and then we take that buy, right? Another extension has happened in the markets, and then you can see clearly where you can see where retail traders are looking for sell like this, right? They would probably do a trend line like this, and now we can't clearly see what is happening here, right? I mean, how does this channel work? Does it work like this, maybe? Right? Something like this. I can't even draw this correctly. Here, something like this, right? There's buying and selling, buying and selling, buying. There's an area of people bought here, retail traders bought. Then there's other retail traders that bought from here because now they see a double bottom, right? And then there were other sellers that were looking to sell here, potentially in this area, right? If we scale down to the lower time frame. And there you go, right? As a smart money concept trader, we wait for, again, signs for us to know that prices are heading up. We wait for price to respect demand. Okay, that's our first indication, is for prices to respect demand. In fact, wait for that break of structure, then wait for price to respect demand. Then we wait for some confirmation here, wait for the change of character, and then we wait for price to touch our area of demand again on a smaller time frame before prices shoot off, right? So very easy to understand. So as you see the flow of orders here, notice what's happening here. We had a complete break of structure here. You can see all the break and retest traders, right? I mean, you can sort of call it a break and retest, sort of not. All right, you can see that there's a line right there, right, where that break of structure has happened, and you can see obviously when price was dipping below and sort of in this behavior, you can see there's a lot of retail traders buying, right? But obviously we know as retail trader, smart money concept traders, that this is all just inducement. There's our true area of demand right here, right? This true area of demand right there. Can't draw correctly, and then we wait for price to come and touch the area of demand. Now, the only reason why price hasn't come to demand is because there's a major supply zone here, this big gray area, as you can see, and then price has started to move rather bearishly here, started to break the first structure. Now, I want you to see something here. Look, price has broken structure. You can see there's already sellers in the market right here trying to enter the market, retail traders, right? Us smart money concept traders wait for a full retracement, but to the backside, wait for price to respect some area of supply, and then we wait for that change of character again, and then we strike right there, right? As far as break and retest traders, obviously they a lot of them are probably doing something like this, where they're seeing probably a potential trend line, a trend here. They were trying to sell, price was taken out, take out the retail traders, and they lost, right? You can also see this area here. There were probably retail traders doing this as well, something like this, right? Retail traders were buying, buying, buying. Prices extended, came back, they bought again, they failed, price took them out, price took everybody out, and then price started going against them. It's very easy to see what price is doing here, as opposed to how smart money trades and how retail traders trade in the market. I can continue on and on and on, but it's the same behavior, right? It's typically the same behavior. So what I'm trying to say here, right, in this video here, and what I'm trying to really resolve is that, you know, there is a smart way of trading, and then there's a dumb way of trading. Now, I don't want to downplay again the break and retest traders here, because I really want for both sides to see the differences, right? How both differentiate in the market, you know, as opposed to how you know, one doesn't know how to trade in the market, right? How one doesn't see clearly how each trades. So what I'm trying to say again here is that, you know, there's no right or wrong way to trade, but there is a right way in terms of seeing how the market plays out, right? In terms of how the behavior moves, right? And so we can do a better job finding and understanding how to trade the markets, okay? We definitely don't want to be trapped in any of the, you know, dumb way of trading, right, or the retail traders way of trading, because we can certainly tell that that is not how we trade. One last thing I wanted to leave you guys with, if you notice here, there's an area of consolidation, right, when liquidity is happening. You can see that everybody was buying and selling here as smart money concepts, right? Then whoever was buying, prices were taken out, and then prices retraced all the way back to the highs, taking out all these sellers here as well, and then prices started moving rapidly to the downside, right? What we're looking for here as you know, retail traders, we're obviously always waiting for an area where price impulsively moves to the downside and then waits for a retracement to the back to the demand or supply in this case, and then we wait for another area for to impulsively push to the downside. All right, so that's it, guys. That's it in a nutshell. So if you guys have any questions or concerns about this video or what I'm saying, definitely leave it down in the comment in the section below, and definitely leave a thumbs up on this video, because this encourages our team to obviously continue sharing more videos in the near future. And this is what obviously keeps us up to date with everything that we're wanting to do, right? So without any further ado, I will see you guys in the next video.
Nothing can stop me, I'm all the way up.